but you can change the frequency with which you win and the frequency with which you lose. It's really a matter of deciding what kind of investor you want to be. It's just like picking a restaurant to eat at. Some people like spicy food. My wife and I went to Olive Garden right before class. I wanted Olive Garden because I had a taste for Italian, and I ate so much food that I felt like the human beatbox, and I had to go lay down and take a nap because that Italian food this will weigh on your body. But we also talked about going to Outback Steakhouse because we like the steak and the chicken and all that. We talked. What else did we talk? We talked about Red Lobster because Red Lobster has the brother that runs the company, and I just like Red Lobster even before they got a black man. But having a black man as a CEO made me like them that much more. And so here really, when you think about investing, that's really the biggest thing to understand is that everything comes down to style. The big question is what type of investor are you? What type of investor do you want to be? And that'll help you determine how much risk you want to have, whether you want to receive income or take on risk. One is not always better than the other. It's not always better to have income than it is to take a chance. It really comes down to what you need. Like I'll give you an example. Today, I was talking to our son, and one thing that he told me was we were talking about Oklo stock. He got really excited about investing because basically Oklo stock, as you know, has gone up over 1,300% since we started talking about it. Some of you have made as much as 50 to $100,000 on this stock, and I'm super happy for you. And one thing that he mentioned was, I mentioned to him. I said, "Yeah, did you see the market went down?" And he said to me, he said, "Yeah, I didn't." He said, "But I didn't sell my stock though." And so what I said to him was, I corrected him immediately. I said, "Yeah, you shouldn't sell just because things went down for a day." I said, "That's like breaking up with your girlfriend because she had a bad week. You don't do that, right? If you're in a long-term relationship, that means you ride the ups and downs." And so, literally, if you ever ask me when should I sell my stock, I'm gonna always say, "Well, why? What are you selling it for? What's your reason? Do you have a reason?" If you don't have a reason, then there is no reason, which means maybe you don't sell. And so let me give you some reasons why you might sell stock, and this is going to fit into what we're going to talk about with put options because put options relate to selling. They relate to selling the asset. Typically, people will sell their stock because either A, they have what is called a liquidity problem, meaning that you just need the money. That's what I told her son. I said, look, if you need the money, then you got to sell. But you really want to liquidate, keep yourself liquid, so you never have to sell. Wealthy people don't really sell their stuff that often. They sell if they have to. Because why? Well, because they know that when they sell something, it's like letting somebody adopt your pregnant daughter, right? You're not just losing your daughter, you're losing the baby inside your daughter. She's going to have and the other kids that she can have later on. And so why do I say it like that? I hope that doesn't sound like a weird example, but a stock has potential. An investment has potential. That stock is that those assets, you bought those assets because you expected growth. So when I sell a stock for $50, I'm not just selling a stock for $50. If I'm selling a stock for $50, I'm selling a stock that could become worth 100, 200, 300, 400. If you had a diversified portfolio in 2005 of S&P 500 blue chip stocks, and you sold that portfolio in 2005 because you needed the $30,000 that was in that account, you didn't just sort of pass up or trade in the $30,000. What you did was you received $30,000 in exchange for about 250,000. You're paying a massive amount of what you call a shadow price. The shadow price is the price of an asset that lives in the shadows.